Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. We're going to check in on the markets after a V-shaped recovery, putting all-time highs back in play. I'll let you know what the biggest clues are for me as to whether or not we're about to re-enter melt-up mode in the market. Also, I'll go over a losing trade that I had from Friday, but how it shows improvement through my trading career. Quick note, this Monday, I'm going to be doing a live public stream on our YouTube channel, just showing what we do with the Chart Guys, starting at 9 a.m. Eastern, doing a little pre-market prep. And then through the first hour of the trading day, maybe we'll take a live trade. We'll see what presents itself. But check out the link in the comments for that live stream Monday morning. So more and more throughout my trading career, I am using the futures charts. I used to just use SPY and QQQ because that's what I'm trading. But you'll find the futures charts give you a lot more data and information because they trade the extended hours and also things that you might not see. For example, ES does not have an all-time high. SPY got an all-time high. Another example on Friday, here's NQ. The overnight low from Thursday to Friday held the low of the day on the morning, and we ended up seeing a pretty solid bounce off of that level. If you're watching QQQ, you don't see that level because it was hit at 2:45 a.m. QQQ doesn't start trading till 4 a.m. So I highly suggest using the futures charts to get the complete picture of what's going on. So we had a V-shaped recovery. We were watching the potential falling wedge on the daily time frame, and obviously at this point, that has confirmed in a big way with a lot of follow-through. We have not confirmed a daily uptrend from the lows. And again, this is another example of where our charts vary a little bit in terms of how the futures charts look compared to the ETFs. But the most important thing for me to tell us that melt up is back on would be if we see hourly oversold conditions, which we got real close to Friday afternoon, if that marks a daily higher low. And if we form a daily bull flag and then head back to the all-time high. That I almost get just as much, if not more information as to whether or not a bull move is significant based on what happens during the consolidation and not even so much as what happens during the bull move. Obviously, they're both important, but I get just as much from the consolidation. So we just started to see a little weakness on Friday. It looks like daily consolidation is just getting underway. We're going to watch what is the retracement size. Bulls want to see 382 retracement or less. Bears want to see 50% retracement or more. And we're going to get a lot of information this coming week. We also have the FOMC coming up, not this week, but the following week. And we've also got the Super Bowl of earnings with all the major tech names. So got to keep an eye on that as well. But so far, this V-shaped bounce is fairly similar to a couple prior ones that we saw from periods of consolidation. This is a V-shaped bounce in August. This is a V-shaped bounce in October 2023. Granted, the periods of consolidation that led to those bounces was much more significant. They got to daily oversold. We didn't on this pullback. But again, just want to use those as examples where you think you need to confirm a daily trend change. Next thing you know, you've bounced 10 to 12% without even confirming a daily uptrend. So next check mark for bulls, confirm a daily uptrend, healthy retracement size. Can hourly oversold mark the daily high or low? And the same goes for ES here. And again, the difference is it's a little bit stronger just because it got right up to our resistance level. But same deal. What does consolidation look like? Again, just a monster. We had 6 gap up in a row on SPY and QQQ. I don't know if I've ever seen that. It's just wild. But again, the only resistance level left, we're stalling out there. And it's the psychology of a cup and handle if it can be a bull flag. I know it doesn't look like a beautiful cup that you would drink out of, but the psychology is when you're in an uptrend, you fail resistance, and then you bull flag and you break both resistance levels. We'll see if a bull flag can shape up. SMH. So SMH on the daily chart, again, same thing, just absolute V shape. Got to confirm the daily uptrend. And watching the retracement size, the consolidation is already more significant than the NASDAQ at this point, but there's still no red flags for it. And I am scouting daily higher lows this coming week in the energy sector, which we'll look at in just a moment, and also semiconductors. But again, got to put on my bear glasses because you never want to break resistance right into consolidation. And we broke resistance right into a pullback, and now we've broken resistance. And if we have a red week, we're going to have to keep an eye out for the possibility of a rising wedge on the longer term time frame here. So not sure that's what's shaping up, but again, we could say, okay, bulls made a complete recovery on the V shape, but got to keep an eye on that as a possibility. So again, retracement size, pull back 50% plus of the move that we just saw on the way up. And we're going to be talking about that rising wedge a good bit into February. If we confirm the daily uptrend, then maybe we won't. Tesla, red week, inside bar, and earnings are going to determine whether this is a weekly bull flag or not. And earnings are this coming week. So the most important support, 373. The most important resistances are 440, and then the all-time high, 488. I have my swing position on this move up, and I have not added it back because I didn't see a spot that I liked it. And at this point, I'm just going to wait till post-earnings because I don't like the coin flip gamble. So we'll see. A little bit of relative weakness this week, closing near the low of the week. But again, it's going to be earnings. Financial sector, V-shaped recovery with its earnings. Again, we had a bear break, earnings come out, and then we just have a V-shaped stair-step move. Little daily bull flag quickly confirmed. All-time high 5140 is just over 1% away. So again, bigger picture. Was a little concerned with the loss of weekly EMA 12 for the first time in 6 months, but bulls say don't worry about it. We're still in full control. And we'll see if we get that all-time high. Again, I've talked about a blow-off top multiple times for the possibility of it in the broader market. With where we stand, how this consolidation has gone, we would need another big leg up if that's going to be on the table. You know, another new all-time high, 5 to 10% to start this year. So still on the table, but not without another leg up. IWM, I don't have a ton of clarity on it, which usually means it's a megaphone. So daily time frame, you could draw an uptrending resistance, downtrending support. So battling around there. Again, I'm not trading IWM anytime recently because of the lack of clarity for me. So just watching it bounce around. XLV. So XLV got another leg up and is now shaping up the possibility of a weekly inverse head and shoulders. And again, we got to use all the time frames, right? So, okay, possible weekly inverse head and shoulders. If we fail resistance of 147.12, we pull back, we have enough space for the weekly higher low. Can the bulls confirm the weekly uptrend? But remember, we're also watching for potential monthly head and shoulders. So how will a monthly bounce get underway? It would likely need to be a weekly inverse head and shoulders. Confirm the weekly inverse head and shoulders, and I start keeping an eye out for the possibility of a monthly head and shoulders because the annual chart just gave us in 2024 the most bearish yearly candle that we've seen in the healthcare sector in over a decade. Why? Because there was a huge upper wick of profit taking and all the other candles are bullish. So that's what I'm watching for, and that's just an example of how, top-down analysis of zooming way out to the 12-month chart, then the monthly, then the weekly, and just laying out paths of this is how it could shape up if this is going to shape up. So I know what I'm watching for, and I will be keeping an eye out for a potential monthly lower high, but I'm not going to assume a monthly lower high is going to form and just scale in short. I need a level where I say, that's either the monthly lower high or I'm wrong to have a nice clear stop, because I'm not going to use the all-time high as a stop. That's too far away. It's not favorable risk reward. Quantum names. So did a few specific quantum videos, and it's just playing out beautifully as far as the most likely scenarios. We were looking for the weekly higher lows as most likely. I was talking about the inverse head and shoulders on the 4-hour time frame. So the last video I did, I said I'm bearish in the short term for 4-hour consolidation, but then I'm going to be bullish for the 4-hour higher lows to look for the inverse head and shoulders. QBTS, just picture perfect 4-hour inverse head and shoulders. Then said, all right, now we're going to scout weekly lower highs because we know that's the most likely scenario with this much volatility. And out of these quantum names, IONQ is the strongest, RGTI number 2, QBTS number 3, QUBT is the weakest that I watch. And so there is a lot of space on QBTS and QUBT for weekly lower highs. Actually, the weekly bounce hasn't even officially started on QUBT. RGTI is much stronger. Look at the bounce retracement. We bounced almost 200% from the extended hours lows in the $5 to 16 plus. But there's a big upper wick there. A lot of profit taking on Friday. is that the start of a weekly lower high being set? That remains to be seen. I'm going to be scouting hourly lower highs as the result of next bounce on Monday because of the size of the pullback. But the most likely scenarios are playing out. And I anticipate the weekly charts are going to continue tightening up through February. Crypto stocks getting tight. Bitcoin is trading sideways. This coming week, we're either going to see a new all-time high or a bear break below 100,000. And that's going to dictate these crypto stocks in the short term. Coin, trying to get going, but another upper wick of profit taking on Friday. Possible for a weekly lower high on coin to be shaping up. And the miners, MARA, look at how much space we have for a weekly lower high from where we came from. So keeping an eye out, depending on how Bitcoin breaks, of course. But again, the most likely scenario on a lot of these charts will be weekly lower highs as well. So let's talk about my failed trade. So one of the trades that I like is a later morning trade strategy, which is when you have a morning move clearly showing you one side has won, and it's just usually a straight up move. And I like to look for the 15-minute high or low off EMA 12 for a solid bounce. And here's an example of one that failed. Here's an example of one that worked. OKLO on Friday. Blue sky breakout, uranium name. So strong morning move, new all-time highs. You pull back, you bounce off the 15-minute EMA 12, that's your high or low, and you have a very nice later morning trade where, okay, you missed the morning rush, but that's your second chance at a trade, and we go up 8 to 9% from that 15-minute high or low. So there's an example where it would have worked had I chosen this name. I chose to try for RGTI, and it failed. So what I did was, again, I wait till the price gets down close to 15-minute EMA 12, and on this break, I'll just zoom in because I was on a 1-minute chart, but on the break of 15 is when I made my first entry. And what I do, my style is enter a position and then sell partial into a bounce to get my cost basis a little lower and to get my ammo back where I now have a half a position that I can reload, and I flip around a bit to get a nice cost basis and let my position try and play out in full control. So break 15, I buy. My entries in the 1490s, I sell partial. We bounce 1% in a minute. So I sell partial into a 1% bounce, knowing I'm trading counter short-term momentum. So now let's say I'm in at 1497. I sell half 12 pennies higher. Now my break even is 1485. And then I patiently wait and we try and bounce and we're right around my break even. So I'm letting it play out. We get another leg down. I say, all right, I got half a position ready to go. I reload it on the break of 1480. Let's say I'm in 1476 and then I sell it 10 cents higher, 1486. So now my half remaining position it was 85 break even. Now it's 75 break even. And I got my ammo back for a half position to do it again. And that's how I very often am positioning to try and let it play out. Now, in my earlier trading career, I look at this chart and I definitely would have kept flipping and kept trying to position for the 15-minute bounce that did not come for a long time. And once it did, it was just a bear flag and we gave it all back. I look at this chart and say, 4 years ago, 5 years ago, I could very easily have given back my week's worth of gains trying to play this with constant flipping and ending up with a much bigger loss than I anticipated. I'm proud of myself for taking a little red trade here, but I'm proud that I gave up. Essentially, I gave up at a certain point on this break and ended up with a small red trade. And the reason I gave up on that break is because of two reasons. Number one, at that point in time, the 15-minute EMA 12 has clearly been lost. Part of my thesis is that needs to hold. And because it didn't, I was wrong. And I have to admit, I was wrong. The second aspect that kept in my brain, that kept me safe, was a weekly lower high is the most likely scenario. Now, I'm on the 15-minute time frame. Why do I care about the weekly chart? Well, by keeping that in the back of my mind, I know that weekly lower high can shape up at any point from here over the next however many days. And now with this big, double-digit 15% drop from the highs, it's possible that was the weekly lower high being set. The bears have a lot of proving to do. They got to confirm an hourly downtrend. They got to lose the daily uptrend. But it's possible that's the first sign. And so those two things kept me safe And again, some people, newer traders, don't like losing. I am more proud of this loss, this trade. I'm more proud of this trade on the week than any of my winners, because it proves to me that I was doing everything right that I should have been doing. MARA, we did it. Dollar. So dollar weekly EMA 12 support test. Anything above 105.42 is a weekly high or low. This is the weakest we've seen the dollar in a couple of months. We will need to lose the weekly uptrend or confirm a weekly downtrend if we're really going to put in a longer term top. But with that, we've got gold back at all-time, testing all-time highs. Again, it's a monthly bull flag. There are no red flags on this gold consolidation whatsoever. And we're testing all-time highs. So gold bulls fully in the driver's seat. Worst case scenario, we fail all-time high, and we got a lot of space for a weekly high or low to try and be a result of that. Silver is still much weaker. We are watching a 2-day falling wedge on silver. There's been a lot of falling wedges in this market recently. And I would say it broke bull, and now we're back testing. At this point, I don't care about the falling wedge anymore. I've moved on now, and we've got to see a weekly trend change back to bulls. It's similar to healthcare in the sense that, okay, we've had a decent weekly bounce. We're still in a weekly downtrend. Can we get a big enough bounce to try and shape up a weekly inverse head and shoulders? So we're trying for a silver monthly high or low off EMA 12 again. Could this be a monthly head and shoulders? Yep, got to keep an eye out for that as a potential possibility. I'm not going to say that's the most likely scenario because I have no conviction of that. But again, it's just an exercise of saying, okay, I'm bullish because we're in a monthly uptrend, but I put on my bear glasses to ensure that I won't be surprised if things change from here. I'll recognize it as it's happening, if it's going to happen. Oil. So we had the beautiful break of this tight range. We knew oil volatility was coming to start the year. We got beautiful bull break follow through, and we know to then zoom out to the longer term tightening range from there. So this is the 2-month chart, and we rejected from resistance. So again, just viewing this as a longer term tightening range, and it's possible we remain within this tightening range for another bunch of months. But bears have the proving to do here. Bears want to see a drop down to the low 70s to create the space for a weekly lower high next bounce. At this point, the retracement size is still just fine for the bulls. There's your 382 retracement at the moment. We haven't even confirmed a daily downtrend yet. We shot straight up to resistance. If you're going to play off resistance and support, you want to get there as extended as possible. If a bear is looking at 81 resistance, they're saying shoot straight up, use up all your energy, get exhausted into that resistance. And that gives a higher probability that you're going to reject. And so we rejected, and the bears must confirm a daily downtrend to see further weekly consolidation, etc. But it's going to be a pretty important next 2 weeks for oil to see if that 2-month equilibrium is going to keep playing out into the middle of the year, or can bulls set a weekly high or low and break 81. Still in some of the energy sector trade, definitely very much expecting this consolidation after its V-shaped bounce. And now the question is, are we going to see a weekly equilibrium? I may reload what I sold for a weekly high or low. Again, my break even at this point is well under the low of where we came from. But watching for that tightening range as the most likely scenario. Natural gas still looking fine. Technically, weekly consolidation started. It's a possible weekly bull flag, as it was a daily downtrend confirming with 0 bear follow through at the moment. Again, my target's in the 5s. I'll show you, an example of me giving this no attention. So what I say is that your attention span, there's opportunity cost. I can't watch everything in the market. I'm already overwhelmed with everything that's going on and all the opportunities out there. So there was an example where there are days where I don't look at, I'll be on the computer trading and doing the chart guys, chat room and all that for 4 hours. And I still will have not looked at natural gas at any point that day. Why? I'm not selling. We're not over $5. I'm not selling. We haven't hit my stop loss, which is, 20% plus to the downside. I just know that there's going to be no actionable signal given to me on today or this week. And so why do I care to even look at it? It doesn't matter to me. I'll check in on it every now and again to see what the chart looks like. But again, that's an important lesson in my opinion where if you are doing this more actively and are constantly looking for things, it's important to put things in the back of your mind and open up that space for other things, essentially. All right, that's what we got. Quick recap. I talked a lot. So what does consolidation look like in the S&P 500 and NASDAQ? We have all-time high resistance. Do we set an hourly? Do we set a daily high or low from hourly oversold conditions? What does the daily retracement look like? Other than that, oil. Keeping an eye on oil to see if bears can convincingly reject from $81. Need to confirm a daily downtrend there. And a whole lot of other stuff that I'm not going to repeat, but you can watch the video again if you're overwhelmed. Do good things. Have a great weekend. Oh, forgot to mention something. I'll stick it at the front of the video. See you next time. Time to reclaim the garden and take down the biggest tree remaining. Been chipping away at it. Probably a total of 5 different days at this point. We're going to turn this into a bench that will be overlooking the ponds. Just a place to sit or take a nap. So got to deal with where the bunnies are living. I'll do that in the spring. And the endless pile of firewood that I chop down and stack, and it keeps growing. All the branches I keep burning. Probably about 75% of the way done at this point, but heading towards the home stretch.